Question 1. A SIE full SIE exam item describes a representative doing securities business outside the firm without approval. Which answer fits? Option A, front running. Option B, pegging. Option C, selling away. Option D, hypothecation. The correct answer is option C, selling away. Selling away occurs when a representative participates in outside securities transactions without proper firm notice or approval. Front-running trades ahead of orders, pegging manipulates prices, and hypothecation pledges margin securities. Question 2. Under SIE conditions, how should the central bank influencing money supply and interest rates be labeled in full SIE exam? Option A, SIPC. Option B, transfer agent. Option C, Federal Reserve Board. Option D, MSRB. The correct answer is option C, Federal Reserve Board. The Federal Reserve Board influences monetary policy, money supply, and interest rates. SIPC protects brokerage customers after firm failure, the MSRB writes municipal rules, and a transfer agent tracks securities ownership. Question 3. Imagine a test item says a stop limit order activating but not filling because the limit price is missed. What is the best full SIE exam answer? Option A, guaranteed coupon. Option B, guaranteed market fill. Option C, guaranteed voting right. Option D, stop limit non-execution risk. The correct answer is option D, stop limit non-execution risk. Stop limit orders protect price but can miss execution after activation. They do not guarantee a market fill, coupon, or voting right. Question 4. What should stand out in a full SIE exam STEM about a broker-dealer recommendation standard focused on the retail customer's best interest? Option A, Investment Company Act only. Option B, SIPC rule. Option C, Regulation Best Interest. Option D, MSRB markup rule. The correct answer is option C, Regulation Best Interest. Regulation Best Interest applies to broker-dealer recommendations to retail customers. Investment Company, SIPC, and MSRB markup rules do not define this standard. Question 5. When full SIE exam review mentions the required disclosure explaining standardized options risks, which term applies? Option A, Options Disclosure Document. Option B, Proxy Statement. Option C, Official Statement. Option D, Account Statement. The correct answer is option A, Options Disclosure Document. The Options Disclosure Document explains standardized options and their risks before options trading is approved. Official statements belong to municipal offerings, proxy statements solicit votes, and account statements summarize account activity. Question 6. A SIE full SIE exam item describes an order requiring prompt handling without time-price discretion. Which answer fits? Option A, Discretionary order. Option B, GTC order. Option C, Not held order. Option D, Held order. The correct answer is option D, Held order. A held order must be handled promptly under the customer's instructions. A not held order gives time and price discretion, GTC describes duration, and a discretionary order allows broader trading decisions only with authorization. Question 7. A quick-fire full SIE exam video asks about an order giving the broker time and price discretion. Which answer fits? Option A, Not held order. Option B, Day order. Option C, Market order. Option D, Held order. The correct answer is option A, Not held order. A not held order gives the broker discretion over time and price but not over the security, side, or size. A held order must be handled promptly, a market order prioritizes execution, and a day order only sets duration. Question 8. Under SIE conditions, how should a customer losing money because a recommendation performed poorly be labeled in full SIE exam? Option A, MSRB reimbursement. Option B, No coverage for bad investment advice. Option C, FDIC reimbursement. Option D, full SIPC protection. The correct answer is option B, No coverage for bad investment advice. SIPC does not cover losses from bad advice or poor investment performance. FDIC and MSRB reimbursement do not cover that securities loss either. Question 9. What should stand out in a full SIE exam STEM about trading on material non-public information? Option A, churning. Option B, breakpoint sale. Option C, selling away. Option D, insider trading. The correct answer is option D, insider trading. Insider trading involves trading while using material non-public information. Selling away is unauthorized outside securities business, churning is excessive trading for commissions, and breakpoint sale avoids mutual fund discounts. Question 10. For full SIE exam practice, which option turns a customer losing money because securities declined in value into the correct term? Option A. No SIPC market loss coverage. Option B. Full SIPC reimbursement. Option C. FDIC stock insurance. Option D. MSRB loss payment. The correct answer is option A. No SIPC market loss coverage. SIPC does not protect customers from ordinary market losses. FDIC stock insurance and MSRB loss payments do not cover declining securities prices either. Question 11. During full SIE exam practice, what does law creating customer protection through SIPC when broker-dealers fail describe? Option A. Securities Act of 1933. Option B. Securities Investor Protection Act. Option C. Blue Sky Law. Option D. Regulation T. The correct answer is option B. Securities Investor Protection Act. The Securities Investor Protection Act created SIPC protection for customers of failed broker-dealers. The 1933 Act covers new issue disclosure, Regulation T covers credit, and Blue Sky laws are state securities laws. Question 12. If a full SIE exam STEM gives only using reasonable diligence and care when making a recommendation, which answer is safest? Option A. Dividend election. Option B. Registration termination. Option C. Care obligation. Option D. Custody only. The correct answer is option C. Care obligation. The care obligation requires reasonable diligence and care in recommendations. Custody, termination, and dividend elections do not describe this reg by requirement. Question 13. When full SIE exam review mentions charging an advisory fee for ongoing portfolio advice, which term applies? Option A. Sales concession only. Option B. Markup only. Option C. Advisory fee arrangement. Option D. Bond coupon. The correct answer is option C. Advisory fee arrangement. Advisory fees compensate investment advice or management services. Markups and concessions are transaction compensation, while bond coupons are issuer interest payments. Question 14. Pick the SIE term connected to securities business done away from the firm that requires prior notice or approval in full SIE exam. Option A. Public appearance. Option B. Cash account. Option C. Private securities transaction. Option D. Good delivery. The correct answer is option C. Private securities transaction. A private securities transaction involves securities activity outside the regular firm channel and requires firm notice or approval. Public appearance is a communication category, cash account is an account type, and good delivery concerns settlement requirements. Question 15. What should stand out in a full SIE exam STEM about low trading volume making it harder to sell quickly? Option A. Tax bracket risk. Option B. Voting risk. Option C. Low volume liquidity risk. Option D. High coupon risk. The correct answer is option C. Low volume liquidity risk. Low volume can make selling harder without price concessions. Coupon, voting, and tax bracket risks are different. Question 16. After reading protection that does not guarantee investment value, which full SIE exam concept should not be confused with distractors? Option A. Guaranteed tax result. Option B. Guaranteed yield. Option C. Guaranteed profit. Option D. No performance guarantee. The correct answer is option D. No performance guarantee. SIPC does not guarantee profits, yields, or investment value. It is a customer asset protection system for failed broker-dealers. Question 17. Can you spot the full SIE exam answer when the clue is limits on business-related gifts to prevent conflicts of interest? Option A. Dividend exclusion. Option B. Breakpoint discount. Option C. Gifts and gratuities limit. Option D. Margin interest. The correct answer is option C. Gifts and gratuities limit. Gift and gratuity limits help reduce conflicts and improper influence. Breakpoint discounts reduce mutual fund sales charges, dividend exclusion is a tax concept, and margin interest is charged on borrowed funds. Question 18. Suppose the exam STEM says one fee covering advisory services and transaction costs. Which full SIE exam answer is strongest? Option A. SIPC advance. Option B. Bond ladder. Option C. Breakpoint schedule. Option D. Wrap fee program. The correct answer is option D. Wrap fee program. A wrap fee program charges one fee for advisory and related services. Breakpoints, bond ladders, and SIPC advances are unrelated. Question 19. Before recording a lesson on full SIE exam, which term explains a wide bid-ask spread increasing the cost of selling? Option A. Call risk. Option B. Liquidity risk. Option C, tax risk. Option D, reinvestment risk. The correct answer is option B, liquidity risk. Wide bid-ask spreads can signal poor liquidity and higher trading cost. Call, reinvestment, and tax risk do not describe this trading problem. Question 20. A quick-fire full SIE exam video asks about the self-regulatory organization for broker-dealers. Which answer fits? Option A, SIPC. Option B, MSRB. Option C, SEC. Option D, FINRA. The correct answer is option D, FINRA. FINRA is the self-regulatory organization that oversees broker-dealers and registered representatives. The SEC is the federal securities regulator, the MSRB focuses on municipal securities rules, and SIPC protects customers if a broker-dealer fails. Question 21. A SIE full SIE exam item describes thin trading outside regular hours increasing execution uncertainty. Which answer fits? Option A, wash sale risk. Option B, FDIC risk. Option C, bond call risk. Option D, after-hours market order risk. The correct answer is option D, after-hours market order risk. Market orders outside regular hours can face wider spreads and less liquidity. FDIC, bond call, and wash sale risks are different. Question 22. During full SIE exam practice, what does the minimum equity a long margin account must keep describe? Option A, initial margin. Option B, sales charge. Option C, maintenance margin. Option D, loan consent. The correct answer is option C, maintenance margin. Maintenance margin is the minimum equity that must remain in a margin account after purchase. Initial margin applies at the time of purchase, sales charge is a fund cost, and loan consent allows securities lending but is not the equity minimum. Question 23. For full SIE exam practice, which option turns a duty to put the client's interests ahead of the advisor's interests into the correct term? Option A, market making. Option B, fiduciary duty. Option C, suitability only. Option D, firm commitment. The correct answer is option B, fiduciary duty. Investment advisors are associated with a fiduciary duty to clients. Suitability only is a lower broker-dealer standard, market-making quotes securities, and firm commitment is underwriting. Question 24. Which full SIE exam answer is hidden inside the clue in electronic dealer market with competing market makers? Option A, NYSE floor auction. Option B, Treasury Direct. Option C, NASDAQ. Option D, municipal issuer. The correct answer is option C, NASDAQ. NASDAQ is an electronic dealer market where market makers quote prices. The NYSE floor auction uses a different structure. Treasury Direct sells government securities, and a municipal issuer raises public funds. Question 25. Choose carefully in full SIE exam. A derivative product needing special risk awareness defines which term? Option A, options remove all market risk. Option B, options guarantee dividends. Option C, options are insured by SIPC against losses. Option D, options are not suitable for every investor. The correct answer is option D, options are not suitable for every investor. Options can involve leverage, expiration, and assignment risk, so they are not suitable for every investor. They do not remove all market risk, SIPC does not insure against trading losses, and options do not guarantee dividends. Question 26. Which full SIE exam answer is hidden inside the clue the federal agency enforcing securities laws as a risk angle? Option A, FINRA. Option B, FDIC. Option C, SEC. Option D, MSRB. The correct answer is option C, SEC. The SEC enforces federal securities laws and oversees the securities markets. FINRA regulates broker-dealers, the MSRB writes municipal securities rules, and the FDIC insures bank deposits rather than securities. Question 27. When full SIE exam review mentions a dealer buying into inventory below the prevailing market price, which term applies? Option A, management fee. Option B, markdown. Option C, sales load. Option D, accrued interest. The correct answer is option B, markdown. A markdown applies when a dealer buys a security from a customer into inventory below the prevailing market price. A sales load is a mutual fund charge, accrued interest belongs to bond pricing, and a management fee pays a fund advisor. Question 28. If a full SIE exam stem gives only a large market order moving through several price levels, which answer is safest? Option A, tax equivalent yield. Option B, proxy contest. Option C, accrued interest. Option D, market impact risk. The correct answer is option D, market impact risk. A large market order may move the price as it executes through available quotes. Accrued interest, tax equivalent yield, and proxy contests are unrelated. Question 29. Which exam-tested phrase in full SIE exam is linked to the anti-fraud rule, often linked to deceptive securities practices? Option A, Rule 10b-5. Option B, Regulation T. Option C, Rule 144. Option D, SIPC Rule 500. The correct answer is option A, Rule 10b-5. Rule 10b-5 is a major anti-fraud rule used against deceptive practices, including insider trading. Rule 144 covers resales, Regulation T covers credit, and SIPC Rule 500 is not the standard SIE anti-fraud answer. Question 30. For full SIE exam practice, which option turns cash coverage being part of the overall SIPC protection amount into the correct term? Option A, cash sublimit. Option B, bond coupon limit. Option C, unlimited cash coverage. Option D, ETF expense limit. The correct answer is option A, cash sublimit. SIPC cash protection is subject to a sublimit within the overall protection amount. The other choices are not SIPC coverage rules. Question 31. After reading protection when a broker-dealer fails and customer securities are missing, which full SIE exam concept should not be confused with distractors? Option A, MSRB guarantee. Option B, FDIC insurance. Option C, SEC performance guarantee. Option D, SIPC protection. The correct answer is option D, SIPC protection. SIPC protection applies when a broker-dealer fails and customer assets are missing. FDIC covers bank deposits, MSRB does not guarantee investments, and the SEC does not guarantee performance. Question 32. Which full SIE exam answer is hidden inside the clue, a graph comparing yields across maturities for similar bonds? Option A, order book. Option B, fund prospectus. Option C, yield curve. Option D, proxy ballot. The correct answer is option C, yield curve. A yield curve shows yields by maturity for similar debt securities. An order book shows trading interest, a prospectus describes an offering, and a proxy ballot records shareholder votes. Question 33. Does price protection at the cost of possible non-execution point to which SIE tested answer in full SIE exam as a suitability angle? Option A, stop order trigger. Option B, market order certainty. Option C, proxy authority. Option D, limit order trade-off. The correct answer is option D, limit order trade-off. The limit order trade-off is price control versus possible non-execution. Market orders seek certainty, stop orders use triggers, and proxy authority concerns voting. Question 34. Imagine a test item says returning customer securities held in street name after a firm liquidation. What is the best full SIE exam answer? Option A, bond call. Option B, prospectus refund. Option C, customer asset return. Option D, issuer buyback. The correct answer is option C, customer asset return. SIPC liquidation aims to return customer securities and cash when a brokerage firm fails. Issuer buybacks, prospectus refunds, and bond calls are separate processes. Question 35. Review the scenario: wrongfully taking or using customer funds or securities. Which full SIE exam choice matches? Option A, hypothecation. Option B, conversion. Option C, reinvestment. Option D, redemption. The correct answer is option B, conversion. Conversion is the wrongful use or taking of customer property. Hypothecation pledges securities in a margin account, reinvestment uses income to buy more securities, and redemption is selling fund shares back to the issuer. Question 36. Where does being paid to give securities advice as a business fit inside full SIE exam review? Option A, investment advisor. Option B, broker-dealer only. Option C, issuer. Option D, transfer agent. The correct answer is option A, investment advisor. An investment advisor is generally paid for securities advice as a business. Broker-dealers execute securities business, transfer agents track ownership, and issuers create securities. Question 37. Under SIE conditions, how should work outside the firm that must be disclosed under firm rules be labeled in full SIE exam? Option A, ex-dividend date. Option B, outside business activity. Option C, currency risk. Option D, cash settlement. The correct answer is option B, outside business activity. Outside business activity must be disclosed so the firm can supervise potential conflicts. Cash settlement is same-day settlement, currency risk comes from exchange rates, and ex-dividend date affects dividend entitlement. Question 38. A SIE full SIE exam item describes a bearish or protective options position. Which answer fits as a scenario-based review? Option A, covered call. Option B, long call. Option C, long put. Option D, bull spread only. The correct answer is option C, long put. A long put benefits when the underlying falls and can also protect a stock position. A long call is bullish, a covered call involves selling calls against owned stock, and a bull spread is a different multi-leg strategy. Question 39. Which full SIE exam concept separates a customer relationship summary for retail investors from the other choices? Option A, Form CRS. Option B, Form 10K. Option C, Form U4. Option D, Form U5. The correct answer is option A, Form CRS. Form CRS gives retail investors a relationship summary. Form U4 and U5 relate to broker registration, while Form 10K is an issuer annual report. Question 40. Can you spot the full SIE exam answer when the clue is placing a retail customer's interest ahead of the representative's interest? Option A, Regulation Best Interest. Option B, Rule 144. Option C, MSRB Rule G17. Option D, Regulation T. The correct answer is option A, Regulation Best Interest. Regulation Best Interest requires broker-dealers and associated persons to act in a retail customer's best interest when making recommendations. Regulation T covers credit, Rule 144 covers restricted and control stock, and MSRB Rule G17 is a municipal fair dealing rule. Question 41. A quick-fire full SIE exam video asks about a need to check risk tolerance, liquidity needs, and tax situation before recommending a DPP. Which answer fits? Option A, automatic approval. Option B, FDIC verification. Option C, DPP suitability review. Option D, tender offer filing. The correct answer is option C, DPP suitability review. DPPs require careful suitability review because they may be illiquid, complex, and tax-driven. They are not automatically approved for every customer. FDIC verification concerns bank deposits, and tender offer filings are separate. Question 42. Does a REIT that does not trade on an exchange and may be difficult to sell point to which SIE tested answer in full SIE exam? Option A, ETF arbitrage. Option B, SIPC liquidation. Option C, Treasury liquidity. Option D, non-traded REIT liquidity risk. The correct answer is option D, non-traded REIT liquidity risk. Non-traded REITs can create liquidity concerns because shares may not have an active exchange market. Treasury liquidity, SIPC liquidation, and ETF arbitrage involve other areas. Question 43. A quick-fire full SIE exam video asks about a dealer selling from inventory above the prevailing market price. Which answer fits? Option A, dividend. Option B, commission. Option C, markup. Option D, expense ratio. The correct answer is option C, markup. A markup is added when a dealer sells a security to a customer from inventory. A commission compensates agency trades, a dividend is an issuer payment to shareholders, and an expense ratio is a fund cost. Question 44. What should stand out in a full SIE exam STEM about documenting how much investment loss a customer can accept as a core syllabus point? Option A, coupon rate. Option B, syndicate spread. Option C, risk tolerance. Option D, QZIP number. The correct answer is option C, risk tolerance. Risk tolerance is a key customer profile fact for recommendations. Coupon rates, QZIP numbers, and syndicate spreads are product or offering details. Question 45. A SIE full SIE exam item describes bank deposit insurance not covering stocks or bonds. Which answer fits? Option A, MSRB pays failed broker claims. Option B, FDIC does not insure securities. Option C, FINRA insures bank accounts. Option D, SIPC guarantees market gains. The correct answer is option B, FDIC does not insure securities. FDIC insurance applies to eligible bank deposits, not securities such as stocks, bonds, or mutual funds. SIPC does not guarantee market gains, FINRA is not a bank insurer, and the MSRB does not pay customer claims after broker failure. Question 46. Pick the SIE term connected to identifying and addressing conflicts in a retail recommendation in full SIE exam as a last-minute review. Option A, CTR filing. Option B, conflict obligation. Option C, ETF redemption. Option D, bond accretion. The correct answer is option B, conflict obligation. Reg BI includes obligations around conflicts of interest. CTR filings, bond accretion, and ETF redemption are separate topics. Question 47. Which choice best matches the risk of missing a better return elsewhere on a full SIE exam question? Option A, opportunity cost. Option B, currency risk. Option C, credit risk. Option D, regulatory risk. The correct answer is option A, opportunity cost. Opportunity cost is the benefit given up by choosing one investment over another. Credit risk is default risk, currency risk comes from exchange rates, and regulatory risk comes from rule changes. Question 48. A quick-fire full SIE exam video asks about a centralized securities depository supporting book entry settlement. Which answer fits? Option A, depository trust company. Option B, investment advisor. Option C, MSRB. Option D, OFAC. The correct answer is option A, depository trust company. The depository trust company supports centralized custody and book entry settlement. The MSRB writes municipal rules, OFAC administers sanctions, and an investment advisor provides compensated securities advice. Question 49. Why would limited protection for missing securities and cash at a failed brokerage firm lead to one specific full SIE exam answer? Option A, unlimited market protection. Option B, FDIC bank limit. Option C, issuer guarantee. Option D, SIPC coverage limit. The correct answer is option D, SIPC coverage limit. SIPC provides limited protection for missing customer assets when a brokerage firm fails. It does not provide unlimited market protection, FDIC bank coverage, or issuer guarantees. Question 50. How should a candidate classify a separate cash limit within SIPC customer protection and full SIE exam? Option A, unlimited cash insurance. Option B, Treasury PR guarantee. Option C, SIPC cash sublimit. Option D, municipal tax guarantee. The correct answer is option C, SIPC cash sublimit. SIPC coverage has a customer protection limit with a smaller cash sublimit. It is not unlimited cash insurance, a Treasury PR guarantee, or a municipal tax guarantee. Question 51. Which answer would pass an exam day check for receiving premium and taking on an exercise obligation in full SIE exam? Option A, bond holder. Option B, option buyer. Option C, option writer. Option D, rights holder. The correct answer is option C, option writer. An option writer receives premium and must perform if assigned. An option buyer has a right, a bond holder owns debt, and a rights holder may buy new stock but does not have an options assignment obligation. Question 52. Does a firm selling securities from its own inventory with a markup point to which SIE tested answer in full SIE exam? Option A, investment advisor acting as fiduciary. Option B, broker acting as agent. Option C, clearing agency acting as custodian. Option D, dealer acting as principal. The correct answer is option D, dealer acting as principal. A dealer acts as principal when it trades from its own account and earns a markup or markdown. A broker earns a commission as agent, an advisor is paid for advice, and a clearing agency supports settlement rather than selling inventory. Question 53. If a full SIE exam STEM gives only AU.S, traded certificate representing foreign shares, which answer is safest? Option A, T-bill. Option B, REIT. Option C, ADR. Option D, UIT. The correct answer is option C, ADR. An ADR allows U.S. investors to trade a certificate representing shares of a foreign company. A REIT owns real estate assets, a UIT holds a fixed investment portfolio, and a T-bill is short-term U.S. government debt. Question 54. Look closely at securities trading away from a listed exchange. Which full SIE exam answer should be selected? Option A, primary market. Option B, auction market. Option C, over-the-counter market. Option D, dividend market. The correct answer is option C, over-the-counter market. The over-the-counter market covers securities traded outside a centralized exchange listing. The primary market issues new securities, an auction market matches exchange orders, and dividend market is not a standard SIE market category. Question 55. Which choice best matches short-term rates higher than long-term rates on a full SIE exam question? Option A, normal yield curve. Option B, inverted yield curve. Option C, cumulative dividend. Option D, flat tax rate. The correct answer is option B, inverted yield curve. An inverted yield curve occurs when short-term yields are above long-term yields. A normal curve generally slopes upward, flat tax rate is not a yield curve term, and cumulative dividend belongs to preferred stock. Question 56. Which full SIE exam answer is hidden inside the clue compensation tied to investment gains under advisory rules? Option A, markup. Option B, performance-based fee. Option C, bond coupon. Option D, sales load. The correct answer is option B, performance-based fee. Performance-based fees are advisory compensation tied to results and are subject to rules. Coupons, loads, and markups are different compensation or income items. Question 57. Review the scenario: the exchange participant helping maintain a fair and orderly market. Which full SIE exam choice matches? Option A, custodian. Option B, transfer agent. Option C, options holder. Option D, designated market maker. The correct answer is option D, designated market maker. A designated market maker helps maintain fair and orderly trading in assigned exchange-listed securities. A transfer agent keeps records, an options holder owns a contract right, and a custodian holds assets. Question 58. After reading "the customer gets execution but not a guaranteed price," which full SIE exam concept should not be confused with distractors? Option A, stop price activation. Option B, market order price risk. Option C, limit price protection. Option D, all or none restriction. The correct answer is option B, market order price risk. Market orders generally provide execution speed but not price certainty. Limit price protection, stop activation, and all or none restrictions describe different order features. Question 59. Can you spot the full SIE exam answer when the clue is a position where losses can grow as the stock rises? Option A, treasury bill. Option B, short stock position. Option C, long put. Option D, long stock position. The correct answer is option B, short stock position. A short stock position has theoretically unlimited loss potential because a stock price can keep rising. A long put has loss limited to premium, a long stock position can lose only down to zero, and a treasury bill is short-term debt. Question 60. Review the scenario: an insurance contract whose value changes with separate account investments. Which full SIE exam choice matches? Option A, fixed annuity. Option B, variable annuity. Option C, money market fund. Option D, treasury bond. The correct answer is option B, variable annuity. A variable annuity's value depends on the performance of separate account investments. A fixed annuity provides insurer guarantees, a money market fund is an investment company product, and a treasury bond is government debt. Question 61. Where does a fast-moving market causing execution far from the last quoted price fit inside full SIE exam review? Option A, breakpoint discount. Option B, bond amortization. Option C, market order slippage. Option D, dividend adjustment. The correct answer is option C, market order slippage. Market order slippage can occur when prices move quickly before execution. Dividend adjustments, amortization, and breakpoint discounts are unrelated. Question 62. Why would a liquidation process using a trustee to return customer property lead to one specific full SIE exam answer? Option A, underwriting syndicate. Option B, transfer syndicate. Option C, SIPC trustee process. Option D, proxy committee. The correct answer is option C, SIPC trustee process. A SIPC liquidation may involve a trustee working to return customer property. Syndicates and proxy committees have different roles. Question 63. Suppose the exam stem says selling a call while owning the underlying stock. Which full SIE exam answer is strongest as a high-yield review? Option A, naked call. Option B, covered call. Option C, long put. Option D, protective put. The correct answer is option B, covered call. A covered call involves writing a call while owning the underlying shares. A naked call lacks the stock position, a long put is a bearish right to sell, and a protective put ensures own stock. Question 64. If a full SIE exam stem gives only a transaction that creates a new short options position, which answer is safest? Option A, closing purchase. Option B, opening sale. Option C, exercise. Option D, opening purchase. The correct answer is option B, opening sale. An opening sale writes an option and creates a short position. An opening purchase creates a long position, a closing purchase exits a short position, and exercise uses the option right. Question 65. Which full SIE exam clue points to difficulty quickly selling an interest in a partnership program? Option A, call risk. Option B, reinvestment risk. Option C, currency risk. Option D, illiquidity risk. The correct answer is option D, illiquidity risk. DPP interests are often illiquid, so selling quickly may be difficult. Call risk involves early bond redemption, reinvestment risk involves replacing income, and currency risk involves exchange rates. Question 66. Which exam-tested phrase in full SIE exam is linked to investors trading outstanding shares with each other? Option A, secondary market. Option B, treasury auction. Option C, private placement. Option D, primary market. The correct answer is option A, secondary market. The secondary market is where existing securities trade between investors after issuance. The primary market sells new securities, a private placement sells directly to selected investors, and a treasury auction is a government issuance process. Question 67. Which full SIE exam concept separates a firm in the business of securities transactions for customers or itself from the other choices? Option A, issuer only. Option B, investment advisor only. Option C, broker-dealer. Option D, custodian only. The correct answer is option C, broker-dealer. A broker-dealer conducts securities transactions as agent, principal, or both. An investment advisor is paid for advice, an issuer sells its own securities, and a custodian holds assets. Question 68. Why would a communication implying returns that are not properly supported lead to one specific full SIE exam answer? Option A, misleading projection. Option B, official statement. Option C, trade confirmation. Option D, balanced presentation. The correct answer is option A, misleading projection. Misleading projections can violate communication standards because investors may be misled about likely returns. Balanced presentation includes risks, official statements disclose municipal offerings, and trade confirmations report executed trades. Question 69. Review the scenario of fee for withdrawing too much too early from an annuity, which full SIE exam choice matches? Option A, bond discount. Option B, 12b1 fee. Option C, surrender charge. Option D, markup. The correct answer is option C, surrender charge. A surrender charge penalizes early annuity withdrawals during a surrender period. Markups are dealer charges, 12b1 fees are fund distribution expenses, and bond discounts refer to price below par. Question 70. A SIE full SIE exam item describes selling borrowed shares and hoping to buy them back lower. Which answer fits? Option A, short sale. Option B, long purchase. Option C, covered call. Option D, rights offering. The correct answer is option A, short sale. A short sale involves borrowing shares, selling them, and hoping to repurchase them at a lower price. A long purchase profits from rising prices, a covered call is an option strategy, and a rights offering is a primary market shareholder right. Question 71. A candidate sees a client disclosure document explaining advisory services, fees, and conflicts during full SIE exam review. What should they choose? Option A, official statement. Option B, option agreement. Option C, advisor brochure. Option D, margin call. The correct answer is option C, advisor brochure. An advisor brochure discloses advisory services, fees, and conflicts to clients. Official statements, option agreements, and margin calls are unrelated. Question 72. Which choice best matches units used to calculate variable annuity payments after annuitization on a full SIE exam question? Option A, voting shares. Option B, accumulation units. Option C, annuity units. Option D, bond points. The correct answer is option C, annuity units. Annuity units determine variable annuity payouts during the payout phase. Accumulation units apply before annuitization, bond points quote bond prices, and voting shares relate to equity ownership. Question 73. Which exam-tested phrase in full SIE exam is linked to a written statement alleging a sales practice violation? Option A, tombstone ad. Option B, customer complaint. Option C, QZIP request. Option D, trade confirmation. The correct answer is option B, customer complaint. A customer complaint is a written allegation of misconduct or sales practice concern. Trade confirmations report transactions, tombstone ads announce offerings, and QZIP requests identify securities. Question 74. Which answer would pass an exam day check for a firm arranging a trade for a customer and charging a commission in full SIE exam? Option A, transfer agent acting as record keeper. Option B, issuer acting as seller. Option C, broker acting as agent. Option D, dealer acting as principal. The correct answer is option C, broker acting as agent. A broker acting as agent executes on behalf of a customer and is compensated by commission. A dealer acts as principal from inventory, an issuer sells its own securities, and a transfer agent maintains ownership records. Question 75. Which exam-tested phrase in full SIE exam is linked to mixing customer securities with firm securities improperly? Option A. Diversification. Option B. Annuitization. Option C. Breakpoint. Option D. Commingling. The correct answer is option D. Commingling. Commingling customer and firm assets improperly violates customer protection principles. Diversification spreads risk, breakpoints reduce sales charges, and annuitization creates income payments. Question 76. For full SIE exam practice, which option turns a stop order executing far from the stop price after a price gap into the correct term as a core syllabus point? Option A. Guaranteed dividend. Option B. Guaranteed limit price. Option C. Guaranteed stop price. Option D. Stop order gap risk. The correct answer is option D. Stop order gap risk. A stop order becomes a market order, so a price gap can cause execution away from the stop price. It does not guarantee the stop price, a limit price, or dividends. Question 77. Why would a bullish options position with limited loss to premium lead to one specific full SIE exam answer? Option A. Covered put. Option B. Short stock. Option C. Long call. Option D. Long put. The correct answer is option C. Long call. A long call benefits when the underlying rises and the buyer's loss is limited to the premium paid. A long put is bearish, short stock gains when prices fall, and covered put is not the basic bullish call position. Question 78. Which exam-tested phrase in full SIE exam is linked to customer shares missing from the records of a failed broker-dealer? Option A. Tax loss claim. Option B. Dividend preference. Option C. Market loss claim. Option D. Missing securities claim. The correct answer is option D. Missing securities claim. SIPC protection is aimed at missing securities and cash at a failed firm. Market losses, tax losses, and dividend preferences are not the same claim. Question 79. Identify the tested full SIE exam concept behind a fund investing in short-term high-quality instruments. Option A. Growth fund. Option B. Closed-end bond fund. Option C. Money market fund. Option D. Variable annuity. The correct answer is option C. Money market fund. A money market fund invests in short-term, high-quality debt instruments and seeks stability. A growth fund targets appreciation, a closed-end bond fund trades on an exchange, and a variable annuity is an insurance contract. Question 80. Which full SIE exam answer is hidden inside the clue an annuity with value tied to separate account investment performance? Option A. Treasury bond. Option B. Variable annuity. Option C. Common stock only. Option D. Fixed annuity. The correct answer is option B. Variable annuity. A variable annuity's value depends on separate account investments and carries market risk. A fixed annuity has insurer-backed credited interest, a treasury bond is debt, and common stock alone is not an insurance contract. Question 81. Suppose the exam stem says the usual 50% initial equity requirement for buying stock on margin. Which full SIE exam answer is strongest? Option A. SIPC rule. Option B. MSRB rule G37. Option C. Rule 144. Option D. Regulation T. The correct answer is option D. Regulation T. Regulation T sets the initial margin requirement for many securities purchases, commonly tested at 50% for stocks. SIPC rules protect customers after firm failure. MSRB Rule G37 covers municipal political contributions, and Rule 144 governs restricted and control stock resales. Question 82. Which full SIE exam answer is hidden inside the clue coverage tied to accounts at member broker-dealers? Option A. Insurance policy claim. Option B. SIPC member firm account. Option C. Bank savings account. Option D. Commodity pool only. The correct answer is option B. SIPC member firm account. SIPC protection applies through member broker-dealers. Bank accounts, insurance claims, and commodity pools are not the core SIPC customer account coverage. Question 83. If a full SIE exam stem gives only holding or having access to client funds or securities, which answer is safest? Option A. Proxy custody only. Option B. Syndicate custody. Option C. Custody of client assets. Option D. Coupon custody only. The correct answer is option C. Custody of client assets. Custody means holding or having access to client assets and creates regulatory obligations. The other choices do not describe advisory custody. Question 84. A candidate sees the investment account supporting a variable annuity during full SIE exam review. What should they choose? Option A, margin account. Option B, separate account. Option C, transfer agent account. Option D, general account. The correct answer is option B, separate account. A variable annuity uses a separate account for investment options, so the owner bears investment risk. The general account supports fixed guarantees, a margin account involves borrowing, and a transfer agent account is not the annuity investment account. Question 85. Before recording a lesson on full SIE exam, which term explains information a reasonable investor would consider important? Option A, material information. Option B, nominal value. Option C, public rumor. Option D, PR quotation. The correct answer is option A, material information. Material information is information a reasonable investor would likely consider important in making an investment decision. A public rumor may be unreliable, nominal value is not the test, and PR quotation relates to bond pricing. Question 86. Which full SIE exam concept separates a brokerage firm liquidation rather than an issuer bankruptcy from the other choices? Option A, broker-dealer failure. Option B, issuer default. Option C, corporate earnings miss. Option D, municipal default. The correct answer is option A, broker-dealer failure. SIPC is tied to broker-dealer failure and missing customer assets. Issuer default, municipal default, and earnings misses are investment risks. Question 87. Under SIE conditions, how should ongoing compensated advice rather than mainly trade execution be labeled in full SIE exam? Option A, transfer agent role. Option B, investment advisor role. Option C, broker-dealer execution role. Option D, issuer role. The correct answer is option B, investment advisor role. Investment advisors are associated with compensated advice. Broker-dealers mainly affect securities transactions, transfer agents keep ownership records, and issuers create securities. Question 88. Can you spot the full SIE exam answer when the clue is the account holding variable annuity investment options? Option A, separate account. Option B, general account. Option C, special memorandum account. Option D, sinking fund. The correct answer is option A, separate account. The separate account holds variable annuity investment portfolios. The general account backs fixed guarantees, a sinking fund retires debt, and SMA is a margin account concept. Question 89. Pick the SIE term connected to commodity futures contracts outside normal SIPC securities protection in full SIE exam. Option A, SIPC stock coverage. Option B, no SIPC futures coverage. Option C, SIPC bond coverage. Option D, SIPC cash coverage. The correct answer is option B, no SIPC futures coverage. SIPC focuses on securities and cash and brokerage accounts, not ordinary commodity futures contracts. Stocks, cash, and bonds may be within the normal customer asset framework. Question 90. If a full SIE exam stem gives only up to $500,000 of brokerage protection including $250,000 cash, which answer is safest? Option A, SIPC coverage limit. Option B, MSRB markup limit. Option C, Reg T margin limit. Option D, FDIC standard deposit limit. The correct answer is option A, SIPC coverage limit. SIPC coverage is commonly tested as up to $500,000 per separate customer, including a $250,000 limit for cash. FDIC limits apply to bank deposits, Regulation T covers margin credit, and MSRB markup limit is not the tested protection figure. Question 91. Which full SIE exam answer is hidden inside the clue protection if a broker-dealer fails and customer assets are missing as a quick recall drill? Option A, SIPC protection. Option B, bond rating guarantee. Option C, market loss insurance. Option D, FDIC insurance. The correct answer is option A, SIPC protection. SIPC protects customers if a broker-dealer fails and securities or cash are missing, subject to limits. FDIC insurance covers bank deposits, market loss insurance is not provided, and bond ratings do not guarantee repayment. Question 92. If a full SIE exam stem gives only an over-the-counter security with limited market depth, which answer is safest? Option A, annuity mortality risk. Option B, OTC liquidity risk. Option C, FDIC risk. Option D, Roth conversion risk. The correct answer is option B, OTC liquidity risk. Some OTC securities can have limited market depth, creating liquidity risk. FDIC, Roth conversion, and annuity mortality risks are unrelated. Question 93. If a full SIE exam stem gives only a dispute resolution process often used for customer-broker disputes, which answer is safest as a video quiz clue? Option A, arbitration. Option B, annuitization. Option C, hypothecation. Option D, underwriting. The correct answer is option A, arbitration. Arbitration is a formal dispute resolution process used in the securities industry. Underwriting distributes new issues, annuitization converts annuity value to payments, and hypothecation pledges margin securities. Question 94. A SIE full SIE exam item describes few buyers and sellers available for a security, which answer fits? Option A, credit risk. Option B, inflation risk. Option C, currency risk. Option D, liquidity risk. The correct answer is option D, liquidity risk. Liquidity risk is the risk that a security cannot be sold quickly at a fair price. Inflation, credit, and currency risk describe different concerns. Question 95. Which full SIE exam clue points to insurance with cash value tied to separate account performance? Option A, fixed annuity. Option B, closed-end fund. Option C, treasury bond. Option D, variable life insurance. The correct answer is option D, variable life insurance. Variable life insurance involves investment risk because cash value depends on separate account performance. Fixed annuities provide insurer guarantees, treasury bonds are government debt, and closed-end funds are investment companies. Question 96. For full SIE exam practice, which option turns buying a put to protect stock already owned into the correct term? Option A, long call only. Option B, covered call. Option C, short put. Option D, protective put. The correct answer is option D, protective put. A protective put uses a long put to limit downside on a stock position. A covered call sells upside, a short put creates a purchase obligation, and a long call is bullish without owning the stock. Question 97. Review the scenario and exchange using an auction market and designated market makers, which full SIE exam choice matches? Option A, NYSE. Option B, OTC Pink. Option C, NASDAQ. Option D, money market. The correct answer is option A, NYSE. The NYSE is an auction-style exchange with designated market makers supporting orderly trading. NASDAQ is a dealer/electronic market, OTC Pink is an over-the-counter quotation venue, and the money market involves short-term debt. Question 98. How should a candidate classify a demand to deposit cash or securities when equity is too low in full SIE exam? Option A, margin call. Option B, proxy request. Option C, dividend notice. Option D, trade confirmation. The correct answer is option A, margin call. A margin call requires a customer to add equity when margin requirements are not met. Dividend notices involve distributions, trade confirmations report executions, and proxy requests relate to voting. Question 99. When full SIE exam review mentions price control that may prevent the order from being filled, which term applies? Option A, automatic dividend. Option B, firm commitment. Option C, guaranteed fill. Option D, limit order execution risk. The correct answer is option D, limit order execution risk. Limit orders protect price but may not execute if the market does not reach the limit. Guaranteed fills, dividends, and firm commitment underwriting do not describe this order risk. Question 100. Before recording a lesson on full SIE exam, which term explains losses from a passive program generally limited against passive income? Option A, passive loss limitation. Option B, SIPC advance. Option C, dividend exclusion. Option D, wash sale rule. The correct answer is option A, passive loss limitation. Passive loss limits affect how DPP losses may be used for tax purposes. Wash sale rules apply to securities losses, dividend exclusion is not the DPP rule, and SIPC advances relate to failed brokerage firms.